My name is Andi Gray. I'm president of Strategy Leaders, and Dahlia Jennings, who is on this call, is our moderator for today. She's going to be driving the slides and keeping us on track as we go through today's webinar. I'm going to give people a few minutes to gather, and Dahlia will tell us when it's time to get going. So if you want to get a quick cup of coffee, I know we're going to be talking about financials, which can cause some people to gray over. And if you feel like you're going to be taking a snooze, we'll try and keep it lively, but go grab a cup of tea or coffee and that'll help. Check your cell phone, any last minute messages you want to get out the door, and we'll be good to go in just a few minutes. I hope everybody out there is enjoying a good weather day. It was really nice here on the East Coast yesterday. It got warm. Makes us feel like spring is here. It is, after all, the beginning of March. And I think we're all so done with snow and the winter time. And as we look forward, I hope all of you are having good weather today across the country. Makes it so much easier when it's a sunny day out there to be able to focus on the things you want to develop and grow and feel optimistic about them. So I hope everybody's getting their sunshine and vitamin D and boosting their levels of happiness with their serotonin. As I said, we're going to get started in just a few minutes here. Dahlia will let us know when to get going. We're just giving a few of the stragglers a chance to get signed on, and then we'll get started with our webinar. So for those of you who are here already, we are going to run questions at the end. If you've got something burning that you want to ask as we go through the webinar, put it into the chat window. And Dahlia will pick it off. If you feel like you really need to ask something as we go along, just let her know it's urgent and she'll break in and interrupt me to address it right on the spot. And as I said, other than that, we will take questions at the end of the webinar. We've probably only be about a half an hour with today's webinar. And so that should give us time for questions and answers. And see if you can stump Andi. As we work on today's presentation, You also, if you want to have contact with us, further contact, you want to talk about something, I'd love to talk to people about their businesses. No cost, no obligation. It's why we're in business, is to talk with people and help them drive their businesses forward, and happy to take a conversation with anybody out there. Just put your contact information in the chat window. If you want it private, just select the private option directly to Dahlia. You also see my email and my partner's email, Robin, on the bottom of every slide here, and feel free to email us if you want to talk with us directly. And as I said, Dahlia will get you in touch with us as well. Dahlia, how are we doing with people gathering?
I think we're good to get started.
Okay, so we'll give people who are a little slow coming in a couple more minutes to gather while we tell you a little bit about Strategy Leaders. So we'll get going. Strategy Leaders has been around for nearly 30 years now. I'm the founder of the company. I started it based on research that I did with an American economist and business historian at Columbia University, and we were looking at the success and failure drivers in the small business marketplace, which is the largest marketplace in this country. 6 million active businesses with more than a couple of employees, and they are highly committed to what they're doing because it drives their well-being, their lifestyle, and the well-being of their employees. But they have a lot of barriers to success. At Strategy Leaders, we do have a skilled team of employees. We are all specialists at working on growth and development with owners and their management teams in privately held business. And we've got experience in hundreds of industries that we've developed over the years. I am always fascinated by the variety of ways that people find to make money, and love talking to people about what they're doing with their businesses. We do have a nationwide footprint, so we work all over this country, north to south, east to west. And we offer a broad set of services. And as I said earlier, if you'd like to explore possibilities or you have a question you'd like to ask offline, just call us for a free consultation. In terms of what we do at Strategy Leaders, we brainstorm, we figure out what's going on, we help our clients assess the situation, and then bring in people and tools and systems to help make it easier to run the business. We train and coach both the owners and their employees, help to resolve conflicts and build accountability. We do a lot of preparation of the next generation, whether that's inside the company, inside the family, or outside the company. Our goal is to ensure that the company survives from one generation to the next and the transitions that go along with that, which means that we do assist companies with ownership opportunities and transitions. Our goal is to build thriving companies that are run by confident owners and managers, and to create wealth for our clients, and that then can deploy downwards throughout the company. If you think about ways that we can help very specifically in terms of products and services, we've developed a broad portfolio over the years. Our backbone is business consulting, which plays out in terms of business growth programs, transition planning, management team development, and executive coaching. We also do help our clients get valuations done. They're very fast, they're very easy to work with, and they're relative to what's in the marketplace, incredibly inexpensive, and what I like about them, really accurate. We also do get involved in advising owners who are looking to sell, as well as owners who are looking to grow through expanding through acquisition. And as I said earlier, we do a lot of next generation training and development. In terms of today's webinar, I'm going to get started now. So we're going to focus on the importance of financial literacy and what goes along with this. So we're going to break it into 3 sections. What your numbers reveal about the business, connecting the financials with sustainable profits, and then common financial pitfalls and how to avoid them. And I like to say to people that when it comes to financials, most business owners that I know do not have a complete picture of their business, but you can't fix what you can't see or what you don't understand. And so we're hoping today that we can move you a little bit further down the road in terms of being able to see and understand what's happening in your business. So in terms of what your numbers reveal, there are 3 pieces that we're going to focus on. The first is the profit and loss or income statement. And I need to remind everyone, this is only a partial story of the business. In terms of revenue, it may be a complete or an incomplete picture. We see a lot of times that companies that are using point of sale systems, and those are not feeding into their QuickBooks system, that it's really an incomplete picture. It just says revenue. It doesn't help the client to understand what kinds of revenue are coming in. The next thing that you do want to see on your profit and loss, although I would say that the majority of the clients that we talk with don't actually see this or don't have a picture that is accurate, is the cost of goods sold, both the dollars and the percentage that results from that. But the cost of goods sold is expenses that are tied to revenue. These are your variable expenses. On a dollar basis, they should increase as revenue increases, drop as revenue drops. On a percentage basis, they should function on a constant percentage basis. Your gross profit, it's what's left over after cost of goods sold. And the question you want to be asking is it accurate, or can I see it at all? If you cannot see your gross profit, it is going to be virtually impossible to manage and predict the business effectively. So if you don't see that, please come talk to us and we'll talk you through how to get it set up. Overhead expenses, which is where most companies put everything, these should only be the carrying costs of the business. So the fixed expenses, and you want to manage those on a month-to-month and year-to-year basis and see them rise very slowly and then be very constant for a period of time. And then the last piece of the P&L is your net income, which is the outcome of revenue minus cost of goods sold equals gross profit minus overhead gets you to net income. But I do have a reminder for everyone that you still need to pay principal after you get done with net income. I see so many business owners who get to net income and go, Yahoo, I made a lot of money. Let's spend it in order to save on taxes, or let's spend it to do growth. And they run out of cash because they're not thinking about what isn't in the reported on the P&L. In terms of KPIs, here are some simple ones to think about: your net income percentage, your gross profit percentage, your average revenue and your average overhead per month, the revenue per full-time equivalent. If you don't understand that one, again, happy to help you get a clear picture of that. And it's going to tell you how profitable your workforce is. And the last reminder here is that it's really important to focus on business analysis rather than on tax reporting. I find that a lot of clients that I start working with, the books has been set up for tax reporting, which is something the accountants need, but they can manage that on their side. What the business needs is business analysis. And those are 2 different things. If you don't have a good idea of how the business is functioning on an analysis point of view, it's really going to be hard to make progress with the business. So let's take a look at the next piece of what your numbers reveal. This is the balance sheet, which is made up of assets, liabilities, and equity. And I do hear from a lot of business owners that they're pretty uncomfortable with this page, or this set of reports on the business. You can get comfortable with it. It just takes practice. Some of the things to focus on when it comes to the balance sheet is there is a difference between current and long-term. Current technically is defined as anything that happens within the next year or 12 months. Long-term is something that is longer than a year, and that applies to both assets and liabilities. So in terms of assets, for example, a current asset would be your checking account, and your accounts receivable. Long-term would be things like your equipment, inventory, maybe in its own category. And when it comes to liabilities, current liabilities are anything on a credit card, anything on a credit line, and oftentimes I see that's improperly coded to long-term. And then anything from a long-term liability that needs to be paid off within this year. Everything else is long-term. So those of you that got an idle loan, for example, that's a long-term liability. And why is it important to distinguish between the two? Because these do impact your banking ratios, and that will then impact your access to funding. I can't emphasize enough the importance of cash buildup versus debt reduction. I see so many owners, when they get a little bit of extra cash, they try and shove that into paying down debt. And what happens is they end up paying down debt. They still don't have any cash on their balance sheet. They get caught short and they're just back into a debt cycle. And the bank isn't interested in lending to them because the bank says you've done nothing to build up cash that we could lend against. It does take both cash and profits to build up equity. So that third piece of the balance sheet, the equity, which is where the real value of the business is measured. In terms of KPIs, you want to think about a ratio of current assets to current liabilities, debt to equity, inventory turns, cash to cover months of overhead, your total accounts receivable, and accounts receivable over 45 days. Those are just a few of the examples of what you might want to have in place for KPIs in terms of managing the balance sheet. And I will tell you that you can control your real business value through the balance sheet if you get a good understanding of what's happening there, set your goals for what you want to have happen, and then work towards those goals. On the next page, what we're going to take a look at is the cash flow statement. And to the extent that business owners aren't comfortable with balance sheet, they're even less comfortable with cash flow statements quite often. If that's something that you don't have in place, it's okay, relax. But this is something you can work on, say, with your accounting firm, or if you have a really good take charge bookkeeper, they may be able to help you with that. And again, you've got to, when you're working on your cash flow statement, you're going to distinguish between cash and accrual. Cash is what you deposited in the bank and what you wrote checks on out of the bank. Accrual is what you invoiced and what you got bills in for, regardless of whether you've paid any of that or not. And then it merges in the balance sheet to those pictures. Some of the questions that get asked as a result of the cash flow statement is, does your cost of goods sold line up against revenue? So a lot of times I see that an owner has expenses now for an invoice that they're not going to collect for 90 days. And so it's really hard to see what do they still owe? How much money are they getting in? Are they profitable or not? You want to also think about, what did you use cash on hand and your credit line for? A lot of times when business owners have a credit line or a long-term loan, they end up slowly chewing away at it and don't realize the damage that they're doing both to their balance sheet and to their ultimate profitability of the business. You want to think about, how are you going to handle debt payment and ultimately get debt free? But as I said before, you also have to manage that against, how are you going to build up cash and make sure that you have cash on hand. And then also you've got to be thinking about taxes for that you're going to have to pay either quarterly or annually based on profits, or if you've got quarterly payments already due from last year. And then also, how are you going to handle either third or fifth payrolls that happen periodically, depending on whether you're paying on a weekly cycle or an every 2 week cycle. So it's kind of like those payrolls blip up and become a real surprise. And there are ways that you can manage that, but you can also use the cash flow statement to help predict it. In terms of KPIs, some of the ones that you might want to think about is what's your operating cash flow look like? What's your accounts receivable and accounts payable turnover? What kind of working capital do you have to work with? And how are you forecasting any variances? So again, if you're not comfortable with that, if you're not sure how to set that up, give us a call. We'd be happy to help you with that. And what I like to say about the cash flow statement, it is part of the tool you want to have in place in order to predict and manage the future before it happens. And then if you don't like the outcome, start working to change it before it gets here. Okay, so that's on the connecting financials and profits. I'm just going to take 2 more slides here. One is, let's take a look at trends and red flags. Is you want to think about questions like, is the right revenue growing? So a lot of times I'll see owners saying, hey, revenue's growing, I'm up 10%, I'm up 15%, but profitability is declining. And that's because we're selling too much of the wrong thing. We're not focusing on what's going to get us the most money and what's going to give us the best growth opportunity in terms of profits as well as just revenue. We want to think about, are you doing better or worse than last year, and in what area? And you want to think about what's going to be left over, what months have pitfalls. I see a lot of times that companies will have months of profitability and months of losses, and all they're doing is just churning back and forth from one to the other, and they're ending up not really making any progress at the end of the year because they had a good month and then a bad month. You want to be able to identify those red flags and then again work with your team and in order to manage and change the outcomes. There are hidden insights to look for in your numbers. So is your gross profit improving year over year? Is cost of goods sold dropping year over year? What's your goal for net income? And the hint on here is work backwards. So if you're going to plan the business, don't plan the business based on revenue, plan the business based on what kind of net income do I want to have. And remember that when you're talking about net income, you have to have enough money left over to pay for taxes, any debt repayment that's happening on the balance sheet, money to build up cash on hand, so you've got a sleep at night fund, and then also money to reward the shareholders for the risks that they're taking. In terms of practical tips for improving your financial health, I recommend that you build a budget and learn to stick to it. And that includes balance sheet dollars as well as P&L dollars. We have a client right now that we're on a steady budget, but the first 2 months of the year did not come in where we expected revenue-wise. And we were able to identify that 2 to 3 weeks into the year and start implementing changes very quickly on the sales side in order to fix the outcomes. And now they're starting actually to get right on track with the budget. So in their case, it was a breakdown in terms of both the right revenue coming in and knowing what to focus on there, and then also knowing what to do to control their cost of goods sold, which was growing a little faster than they wanted. And they quickly went out and changed pricing on some goods. So something interesting that I would remind you to think about, Dolly actually sent this note out this morning on our team chat, is that 32% of businesses surveyed said that they have raised their average prices in the last month, a 10-point jump from January, and that's the largest increase since 2021, and 29% are planning future increases. So make sure that you are staying on top of your invoicing and increasing your prices and focusing on those customers that you have a strong working relationship with and profitable products that they need, and make sure that you're pricing it appropriately. And then the last tip here is make sure you're holding your people accountable. Don't assume that running the business profitably is all on you, because it's not. It's a team of people that you need to have working with you who are all putting their time and effort into delivering to the tools that you've got, understanding what your gross profit goal is, what your revenue goal is, what the overhead controls look like, making sure that they are actually managing their parts of the organization successfully. And if you're struggling with that, please come and talk with us, because that's the kind of stuff we work on all day long with our clients. All right, let's go look at the next slide. Next piece of connecting financials and profits is looking at the revenue growth rate. So are sales increasing substantially? What do I mean by substantially? 10 to 15% overall increase year over year. Now, some products that are more profitable, you may want to see them rise faster than that rate. And some products that are less profitable, you may want to see them down. But you want to have an overall mix between 10 and 15%, which will allow you to stay ahead of inflation. And that's the question of being able to look at which revenue do you want to grow and what's the most profitable revenue, which is really hard to do if that data is in the point of sale system and you're trying to manage, for example, from QuickBooks. So make sure that you're bringing the data together. In terms of the gross profit margin, I also recommend measure it by product or service. Take the time to analyze specific jobs and do customer reviews. We had a client we started with less than 90 days ago. Owner was pretty frustrated with what was going on. We've already set up the structure where they're now able to do a product by product analysis. So as they produce something, they're able to measure the outcomes on the shop floor. We're also looking at specific jobs that they've brought in, and we're also looking at specific customers that they brought in. So we get that stuff set up very quickly for our clients, because without that data, it's hard to continue on to do some of the more strategic stuff. In terms of net profit margin, you want to be asking how much is going to get chewed up on the balance sheet. I've talked about that already. And then in terms of cash flow metrics, how long can you last? So our recommendation is, and I've never found a client that's there when we start, but we get them there, is you want to have 12 months of overhead sitting in cash. Now, obviously that cash has to be put to work. It has to be managed. It has to bring in money. But you want to be sure that you can last long enough that these black swans that are coming out of nowhere, globally as well as locally, that you can weather 2, 3, 4 of them and not have your business be in jeopardy as a result. Other things you want to look at: accounts receivable and payover turnover. I mentioned those before. It's really about managing your working capital, making sure that you don't work for free because you're writing off too much in bad debts, or customers are cutting their payments to you, making sure that you don't overpay for working capital. I see a lot of people who do short-term financing on high interest credit cards. It's crazy to do it that way. There is money out there today. If you don't know where to go to get money, come and talk to us. We've got great people we have high trust with and had great outcomes with, who can get things financed. And ultimately, in terms of managing your working capital, if you've got enough money to work with, then that's going to help to ensure that you can sleep at night. And that's really part of the bargain here, is making sure that you as a business owner are comfortable and have the breathing room to be able to make the plans that you want to make. Let's go take a look at the next slide. So next section, avoiding common financial pitfalls. I will tell everybody I work with that data-driven decision-making catches problems faster leads to better decision-making and higher profitability. You've got to keep in mind, human beings generally are emotional. Even those of us that take pride at how rational I can be, we are subject to becoming emotional over situations, and finances is one of those that can be a big trigger for people. And we also tend to focus on recent events. So if something goes wrong, we focus on that rather than recognizing that's just an outlier, it's a one-time event, it's an unusual trend, and it's not a trend. I will tell you, trends can be very hard to spot. It requires comparisons, it requires data that you can look at over time. That's something we're masters at setting up, and then helping our clients to analyze and discuss and document. Here's the trends, here's what's going on, here's where the outliers are. You do want to align your KPIs with your business goals and then use that to keep people on track. So in terms of growth goals, in addition to what I talked about for earlier KPIs, you might want to think about setting KPIs for doing more proposals, doing more closes, getting new customers, increasing the size or the volume of your deals, for example. In terms of profit goals, you can set KPIs for managing the budget versus the actual. Generally, you want to have a goal of being somewhere around 95 to 98% on target, both on the revenue and on the expense side. You want to look at adjusting net income dollars and percentages to include taxes, distributions, savings, and debt, all those balance sheet effects. And then I recommend that you make business adjustments based on the financial insights. So if your KPIs are off, look at quarterly outliers. That may mean that it's time to make changes, or trends that say we have to adjust something here. And then get your people involved in this. The KPIs aren't just for you. The goals aren't just for you. They're for everybody in your company to understand what's going on, to understand and line up behind you in terms of what you're trying to accomplish with the business. Okay. So after that, we're going to take a look at case study. This first one, we had a starting point where the revenue detail was in the point of sale system. So they were tracking it over here on the left hand, but the expense detail where they paid the bills was actually over in QuickBooks. And because of that, there was very little ability to line up what was happening between the two and do analysis that would contribute to understanding profitability. In this case, the client had no cost of goods sold at all. It was all just chunked into expenses. So expenses for rent were the same as expenses for people to do the work or for inventory expenses. And it was a mishmash, and they really couldn't see what was happening. And then on top of that, they had an individual managing the books who did not have any formal financial training. She'd learned on the job, she was in over her head, she was making a lot of mistakes, and because of that, the client had not only no understanding of how to line things up between point of sale and QuickBooks, but they had bad data in the system. And as a result of that, they couldn't see what the balance sheet was eating up. They couldn't see where they were profitable or not, and they were ending up short every month. And as they ran short every month, they were chewing through loans that they had gotten. They ended up with no financial backstop. And that then made them look and feel desperate when they were negotiating with customers and vendors. And as a result of all of that, they really were pretty frustrated with the business. And these are warning signs that I suggest people think about. Think about if I were to ask you, what's your level of satisfaction with the business on a scale of 1 to 10? And if you even think on some days that your satisfaction is below 7, I will tell you, go get help right now, because it's a warning sign that you're starting to see problems that you're not in a position to deal with, and get the help before it gets worse. Now, in terms of this client, we put a first focus was on growth and profitability. and what it would take to make serious money. We made a picture of what that would look like 1 year, 2 years, 3 years, and then started driving into that picture. We created a budget that was designed to support the growth and control spending. So we're putting the money where it was going to drive the business forward and controlling the costs that maybe weren't going to help the business grow at all. And then we help the client to go out and secure low-cost financing, get off the credit cards, and that would support them through the low months until we got it turned around and stabilized, and then the business was able to pay off its debts. And in this case, the client was really concerned about taking on any more debt, and I get that. I am not a big debt advocate, but in this case, we had to explain to the client, look, you already owe that money. You already have this big deck of accounts payable that you're going to have to pay off. And because you can't pay it, you're having trouble getting inventory in. That is something that you're better off not trying to pay it all at once, but spreading it out over time, putting money into growing the business, and then you'll have more money to pay it down as things go forward. Let's look at another case study. Had some similarities and some differences. In this case, revenue is stuck. And when we started graphing it out, they thought they were making progress, but as we graphed it out, revenue is actually stuck over the last 3 years. Even though this company was good at sales, they were good at enough things that if they got it lined up correctly, they could make progress. But the revenue is stuck because they were trying to grow the wrong things at the wrong time. Again, they had no picture of cost of goods sold, which meant that they didn't have a way to control what was going on operationally. They couldn't go and say, hey, here are our error costs. We need to clean this up. They couldn't go in and say, we're overspending in this area, because they just didn't know that they were doing that. This particular client had had 7 losing months in 2024, but because they didn't track things, they couldn't see it and they couldn't build a plan to fix it. They went from about $200,000 in cash in the bank to nearly $0 in the bank over time. And when the owner came to us, he was like, look, I just want to sell this business. I'm done. I want to get out. But the reality was, it was at a point where it wasn't going to be worth enough to fund his retirement. And so we had a serious discussion about go now, go later. What are the opportunities and what are the risks? And he made a decision that he's going to stay and he's going to fight for his retirement. And the ending point is we've cleaned up reporting. We got that done in less than 90 days. We can see what's profitable and what's not profitable. We can give that information to the salespeople and tell them what to focus on and tell them what to steer away from. We have a plan to net about $250,000 in this in profits this year, and we have the entire team of the company involved, operationally, sales-wise, and financially, to achieve that plan. And everybody's got accountabilities to help go there. We've stopped using up cash to pay off everything quickly, and we've got some breathing room with cash in the bank. So it's all about focusing on the right things and changing the way you're approaching the problems. Now I'm just going to wrap up here. Here are my recommendations for some actionable next steps. Review your financial statements monthly, identify and track your KPIs, implement small changes that will get you a big financial impact. So tackle the big ones first and then seek expert advice where it's needed. In terms of resources and support for you, we do have some to offer. So in terms of tools and assessments that would be relevant to today's discussion, we set up dashboards for our clients. These are many pages of pictures of graphs, which most people say is easier to understand than just looking at numbers on a page. I agree. We can do valuations, which help you understand where you stand at this point in time, and then also plan out where you could stand under varying conditions. We will do a payoff analysis, which means that we can do what if modeling of future options. So if we play it this way, if we play it that way, if we can accomplish this, if we focus on that, what would happen? And we can give you a downline picture of 1, 2, 3, 4, 5 years out the road. And then we also do goal setting with KPIs. So we'll set up the structure so that either we can track the results or you can track the results. Our goal is with all of this to teach you, educate you, so you're not dependent on us. You're able to perform at a higher level when you're done working with us than when you started. In terms of where to seek advice, my advice would be go places where you're going to combine strategy with tactics. It's not just about, can I produce a report, but what am I going to do with the information by looking at multiple sources? And how am I going to use that information to then plan and structure the future and get my people involved with me to get to a better outcome? And then I also really recommend that you look forward and forecast based on analysis. And if you're going to work with someone outside the company, that you really test them out in terms of their ability to look forward and forecast based on real data. I like to remind people that it's what you don't know that gets you in trouble. That's where you want to go next. You're good at what you do. You know your business. You know you understand your business. What you're talking about now is what the future looks like and the variables that are going to come flying at you as you continue to drive the business forward. So with that, I'm going to turn it over to all of you and we can see if we can stump Andi.
Sounds good. Thank you for that, Andy. Great presentation. Our first question is actually based on that last slide we just looked at. With all of those different tools available, how do I know which one is the best starting point for my business? Should I focus on valuation, KPIs, or forecasting first?
I'm glad you're asking. There is no right answer, and I would, glad to have a conversation with you and kind of play out the options. We do that a lot of times with people. The valuation can be really helpful to understanding, okay, this is where I am relative to where I want to be in terms of the business as an asset in my retirement portfolio. And I think business owners do wait too long. They keep saying, oh, I only need that the year I'm going to retire or a year or two before. You can't change things in the last couple of years, so I do recommend getting a valuation early on and then periodically watching it. But that means you need to have a system that's pretty inexpensive for valuations. You don't want to spend $10, $20, $30,000 to have something that's out of date as soon as you do it. We've got a tool that we can do inexpensive valuations and inexpensive updates, so we can keep giving you a picture of how things are changing. So that's one option. In terms of forecasting and modeling, some of the data that is in evaluation actually becomes really valuable for forecasting and modeling. Don't have to do evaluation to get to it. It really kind of depends on where you are with the business, what your biggest concerns are, and what you want to get done next. And be happy to talk with you about it.
Great. Thank you, Andy. So this person is asking, I review my financial statements, but I still feel like I'm missing key insights. What would be the first thing you would advise a business owner to focus on to really understand numbers?
Well, I think it's not necessarily just one number that you're trying to understand. And that's why we put suggestions in here for KPIs, key performance indicators, because you want to watch a lot of different elements of the business, kind of like looking at a lab test that you've gotten done, and there's a range of what's acceptable, and most of your lab results are right in range, so they're in blue or black. And then there's the outliers that over on the right, often highlighted in red. And those are the ones you focus on because those are the ones that you want to get fixed. It's the same thing for KPIs. And I would suggest that you do set up some tracking for someone to put reports on your desk on a weekly basis and then on a monthly basis so that you can quickly spot where things are out of whack and then put some time and energy with your team, meeting with them to say, hey, this is out of whack. Why is it out of whack? What's going on? What should we do to get it back in line? If you've got a good understanding of where you want to go, so you've got goals, you set revenue, profits, cash on hand, cost of goods sold percentage, gross profit percentage, the AR turnover, accounts payable turnover. If you've got those goals set up, then you can track where you are on a weekly, monthly, quarterly basis, and then you can just look for outliers, and it gets a lot easier to manage.
Okay, thank you, Andi. How can I tell if my cash flow is healthy? What are some warning signs I should look for in my balance sheet?
So the first thing that I look for is what's happening with the bank account. The bank account is a huge indicator of the health of the business, because if you have money left over and you don't distribute all of it to either pay down debt, reward shareholders, pay off something, if the bank account can grow, that's an indication that the business is doing well. And what I see a lot of times is that the business either is kind of constant with its account, cash on hand, or it's been slowly dropping, and debts have been slowly building up. And when you see those two happening at the same time, one cash is dropping and debts are building up, that's a huge warning sign.
Thank you. Another question. So my revenue is growing, but I don't feel any more profitable. Do you have any suggestions on what could be eating up my margins?
So I would do some analysis on the customers that you have, the products or services that you're providing. So I'd isolate the products and services and look at how each product or each service is bringing in revenue, and you're spending money to produce it. That's where the cost of goods sold percentage comes in for each of them. I would also want to look at any area of the business that's been growing recently and do some analysis on that. So are we at a point where we've invested, for example, in a new product and we're about to turn the corner, as opposed to we've had a product for a long time and it was a great producer from us, but we're really competitive. We've now got a lot of competitors and we're getting negotiated harder and harder, and the profitability is declining. I think a lot of times you also want to talk with your salespeople. Where are they having difficulty negotiating contracts, maybe giving away too much, or in terms of what they're focusing on the leads that are coming in over the transom for products that are not as profitable, but it's easy to sell. So you really want to dig into what's happening with your salespeople. I think you also want to spend a little bit of time talking with customers about what are they looking for next? What's on their future radar? So for example, in the manufacturing area, we're seeing a lot of clients over the last couple of years that have gotten into the space sector. And they're seeing a lot more profitability in aerospace than they were in, say, industrial manufacturing. And so you want to also then talk to customers about what they see as the future, what are they having trouble getting their hands on, and see whether or not you can make that for them. Or if you're not sure if you can make it for them, go look for a company to acquire that does know how to make that, bolt it onto your company, and make a leap forward that way.
Great answer. Thanks, Andi. And this is our last question, it looks like. So this person is asking, I want to plan for growth, but I'm not sure how much risk I can take financially. Are your dashboards used to help make smarter decisions when it comes to something?
Absolutely. Absolutely. All day, every day, we're talking with clients about this is what the dashboard is telling us, this is what we've got to work with, and here are the problems. We have a client right now that things are starting to turn around for them, but we had the budget just laid up and it's based on what's in the dashboard and the forecast of what we want. And what we're finding is that the growth rate that they were anticipating of 10% isn't going to be enough to get them the net income they want this year, it's gonna have to be 15%. And so we're at the beginning of the year and we're having conversations about what do we have to do to free up money to beef up sales and marketing. And we've actually found some very effective ways to do that are not going to be high cost and aren't going to be high risk. And so we're going to focus on driving revenue around a certain set of services that this company has to offer to the marketplace that they know are profitable and are going to deliver results. We just need more customers who want that.
Great. Thank you, Andi.
Let's do it. Okay, so we're going to close and wrap up here. If you would like some information, as I said, I love talking to business owners. It's why we exist. No cost, no obligation. If you want a copy of the presentation, just put your information into the chat window and Dolly will get it to you. Email us, it's Andi@Strategy Leaders. Give me a phone call or my cell number down on the lower left, 914-843-0454. Give me a call, leave me a message. I'd be happy to talk with you and give you some time.
Sounds good. Thank you.
Thank you all for coming today, and thank you for making this a good discussion. I appreciate the questions and I appreciate the interest.
I know.